In 2026, you're likely paying the current minimum of $202.90 per month for Part B Medicare coverage. Maybe you're paying more due to a late Medicare enrollment penalty, or perhaps you got pinched by the 2-year income look-back. You're likely also paying a Part D premium close to $40 per month, plus deductibles and co-pays. And nobody told you there's a way to completely stop paying those premiums and other costs legally right now, today. In fact, roughly 5.8 million eligible seniors have failed to enroll in the very program designed to eliminate those premium payments and medical expenses. The program is called the Medicare Savings Program, or MSP. Did you know that the MSP is a Medicaid program that literally pays your Medicare premiums starting in the month you're approved? Amazing! The federal government created this program decades ago, and the states administer it under Medicaid. Many seniors mistakenly believe that because they already have Medicare, they cannot have anything to do with Medicaid. In fact, 46 to 54% of eligible older adults who qualify for the MSP fail to apply to receive it. Are you one of them? Want to know more? If you like what you've seen so far, please like and subscribe and share this video so we can continue to grow this channel. Did you know that you can enroll in an MSP to pay your premiums without joining the full Medicaid program? Did you know that you can combine an MSP with your Medicare Advantage plan for an even more amazing result? Later in the video, I will discuss the advantages of not going full Medicaid. You apply for an MSP through your state Medicaid office, not through Medicare. When you pursue an MSP enrollment only under Medicaid, you are considered a partial benefit, dual-eligible beneficiary. You keep your standard private doctors through Medicare, and the state Medicaid agency operates behind the scenes as your financial sponsor by paying your premiums and other expenses. Enrolling in an MSP solves your premium needs for both Part B and Part D, and sometimes more, as explained later. The percentage of the federal poverty level, or FPL, used for an MSP-only track ranges from 100 to 135% of FPL, depending on which of the 3 income tiers you fall under, and the federal baseline percentages are exactly the same whether you live in a Medicare ACA expansion state or a non-ACA expansion state, which is an issue outside of this video. For 2026, the 100% of FPL baseline for an individual is $1,330 per month or $15,960 annually, and for a married couple, it's $1,804 per month or $21,648 per year. For 2026, the 135% of FPL baseline for an individual is $1,795 per month, or $21,546 annually, and for a married couple, it's $2,435 per month, or $29,214 annually. When applying for an MSP, your review income is boosted by the state with a mandatory extra $20 per month per household. In a moment, you will hear how MSP benefits decline as your income increases, which makes sense. Under all 3 income tier levels, your Part B and Part D premiums are paid for by the state, and as a bonus for Tier 1, the state also pays your Part A, Part B, and Part D deductibles. Additionally, your prescription co-pays are limited to $5.10 for generics and $12.65 for brands. Other than your very limited prescription drug costs, an MSP Tier 1 individual has no medical expense exposure, so there is no need for Medigap insurance. For Tiers 2 and 3, Your Part B and Part D premiums are paid for by the state and is your Part D deductible, but you still have to pay your Part A and Part B deductibles and co-pays, which can be significant or even devastating. And like Tier 1, your prescription co-pays are limited to $5.10 for generics and $12.65 for brands. So, you will need either a Medigap policy to cover your 20% of hospitalization and doctor costs, or a good Medicare Advantage plan with an out-of-pocket limit, like Aetna, with a limit of $9,350 for 2026. So, what are the benefits of enrolling in an MSP only and not full Medicaid? Going MSP by itself is often the preferred route for seniors who want to avoid a state recovery, also known as premium clawback, who want to have higher MSP qualifying income limits and who want the ability to keep their current Medicare doctors rather than having to find ones approved by Medicaid. It's just an easier path, and it comes with peace of mind. With an MSP-only track, you continue using your Medicare card with any doctor in the country who accepts Medicare. I do need to warn you that there is a lot of temptation to go full Medicaid, because once you enroll in MSP, your Medicaid status is activated, and Medicaid covers things Medicare does not cover, like long-term care, nursing home costs, maybe some dental work and vision care. So, when you apply for an MSP, you're not just stopping premium payments and eliminating deductibles and copay gaps, you're opening access to an entire secondary insurance system to which many seniors are entitled but never knew about. Once your Medicaid status is activated, you've also triggered potential exposure to a state recovery or clawback by the state. But no worries, because if your only Medicaid benefit is a Medicare Savings Program based on income tiers 1 through 3, and you don't use other long-term care Medicaid benefits, federal law strictly bans the state from collecting against your home or assets after you pass. Now then, and this is important, you need to consider the cold, hard reality of asset recovery and what it means for your heirs should you decide to go full Medicaid. You need to ask yourself some hard questions, and you may not like the answers. Are you worried about leaving an estate for your heirs? Where are they now in your life? How often do they visit and care for you now? Have they regularly added to your financial well-being by depositing into your bank an amount equal to your Medicare premiums? Are they paying your utility bills, paying for your groceries, covering your co-pays and out-of-pocket medical expenses? Are they in a position to financially cover the very high cost all of your nursing home care for a few years? It's brutal to think about this stuff, but it's real life, and your turn. So, let's go on. The Medicare Savings Program likely has a low participation rate because most states don't aggressively market it. There's no money in it for them to promote it. In fact, most people don't know that Medicaid operates on an expenditure-driven reimbursement basis. The federal government does not give states a lump sum of money up front to fund Medicaid. Instead, states must first spend their own money to pay your Part B and Part D premiums, plus the doctors, hospitals, etc., and after paying all of that, then the state agency submits a reimbursement claim to the federal government. Because traditional federal funding expands or contracts based on actual state spending, it is not possible for a state to have unspent federal money growing in an account somewhere. So, if a state spends less on healthcare in a given year, then the federal government simply sends less matching money going forward. On top of all that, nobody at your local senior center is handing out flyers about the MSP. Nobody at your doctor's office mentions it. Your Medicare representative doesn't bring it up. The invisibility is structural, not accidental. Remember Catch-22? The catch-22 for Medicaid is this. The system works perfectly if you find it. It's efficient, it's generous, it's designed to help. But it only helps people who know it exists and have the energy to navigate it. For everyone else, it's a benefit that might as well not exist. The federal government created a safety net with holes big enough to fall through, then relied on chance and word of mouth to close them. And the people most likely to fall through the net are those most in need of being caught. Maybe you have been eligible for 3 years without knowing it. Beyond the cone of silence, the application process is where most people get stuck. You have to contact your state Medicaid office, not Medicare. That's the first barrier. Most seniors assume it's the same system, so they call Medicare, get transferred twice, then put on hold forever, and then they hang up in frustration. The application itself requires proof of income, proof of U.S. citizenship, proof of state residency, bank statements, tax returns, and sometimes a utility bill. It's not difficult documentation, but it requires you to find the documentation and organize it. If you haven't filed taxes in a decade, which is true for some seniors living below the poverty line, that becomes a problem. You might need to file a non-filer tax return just to prove your income. That takes time. That takes effort. And if you're on a fixed income, already exhausted, and maybe a little depressed, that small amount of friction might be just enough to discourage you. Just go ahead and apply. If you're denied, you can appeal. If your circumstances change, then you reapply. The system isn't a one-time yes or no, and most people don't know to check back. So, they apply once, get rejected, and assume that's the end. They keep paying premiums for Part B and Part D every month out of their Social Security income when they could expend a little effort, be patient, and effectively give themselves a raise. Be different. Apply this week. Every week you wait costs money that disappears, and that money could have been yours. For decades, the federal government has budgeted reimbursement money because they knew that low-income seniors would struggle with ever-increasing premiums. I'll tell you what, I challenge you, I dare you. In fact, I double dare you. Just go ahead and give yourself a raise by having someone else pay those premiums from now on. All you need to do is ask. I sincerely say, good luck to you in applying.